We'll see. I'm looking around 15 minutes. It's firing up.
I have no idea.
Hello, is this on? My name is Dan Robles, and this is the panel on fueling decentralized applications. If you're here to see another topic, then this isn't the room for that. What I'd like to do is start out with asking the audience just a few really quick questions, just show of hands, that's it. Does everybody here know what Bitcoin is? Okay, got to start somewhere. Are you all familiar with decentralized applications that are beyond currency, like contracts or so forth? Okay. I'm sorry? Yeah, there you go. Would you know how to issue your own currency? You go get a blockchain. Okay, you would. Right. So how many people here are also familiar with Ethereum? Okay, a lot of folks. All right, so what I'd like to do is open up with an introduction from each panelist, and then we'll ask a few questions, and hopefully this will just start rolling.
I'm Christian Peel. I'm the organizer of the Silicon Valley Ethereum meetup, and I'm so I think a lot of you apparently know something about Ethereum, but Ethereum, for the uninitiated, is a platform specifically designed on which to build decentralized applications. So they're referred to as contracts, and so you might have several interacting contracts which would combine to form a decentralized application. So there's lots of large community, lots of developers working on it, so I'm very excited about Ethereum.
My name's Paige, but I guess can people raise hands to if they've heard of MadeSafe as well? Okay. So I work for MadeSafe, and right now I'm kind of organizing the community out here, specifically targeting developers to build applications for MadeSafe. But for those of you who aren't aware, MadeSafe has been working on building a new internet protocol. It was started being developed in 2006, so it is not based on Bitcoin and is not necessarily inspired by Bitcoin. However, we've been reaching out to the Bitcoin community because there's a lot of philosophical alignment, and we don't use blockchain technology, but there's a lot of complementary aspects between what we're doing and what blockchain technology is doing. So just beyond that, we're really just trying to focus on building a new internet protocol that removes a lot of the centralized issues that come with servers. So servers can be hacked and go down and catch on fire or whatever. And the idea is to remove the central points of failure and the central ability to control those servers and the information on top of it.
Hi, everybody. This is Sam Yilmaz. I'm a venture capitalist, a managing partner of Decentralized Applications Fund. We like to say it as it is. We invest in decentralized applications. So I see that we'll be getting into the details of what a decentralized application is, but on a macroscopic level, I see the decentralized application being a new entity, just as the corporation was. It was a mechanism to aggregate funding. It was a mechanism to accomplish things that were not previously possible, and that's what I'm investing in. And yeah, well, I'll let everybody make the introductions, and we'll get into the greater detail.
So thanks. I'm Joel Dietz, founder of Swarm, a decentralized crowdfunding platform. And I guess first I'll give a little bit of history of why I'm interested in decentralization. So I think it's very relevant. I think decentralization, one of the great benefits is that it has the potential to remove middlemen that exist in existing infrastructure. And a lot of times there's a lot of friction or fees that are associated with those middlemen. And so, and whatever that is, and in our particular case, we're looking at things like, funding or investing, in which in the U.S. in particular, securities law has it that if you don't have $1 million in assets, you can't invest basically in any kind of early stage venture, which is something that Congress has passed laws to change, but it hasn't really been implemented. And so one of the real interesting benefits of decentralized technology is it gives you that sort of do-it-yourself possibility where you say, well, okay, well, someone else isn't going to let me do this necessarily, but I can actually just go out and do it on my own. And of course, there's a lot of legal and other sorts of complexities around some of these technologies. But they also just have a sort of revolutionary power of, as I see it, giving the power back to the people, which is where it really belongs in the first place. So.
That's incredible. First question I'd like to send to Sam. Could you please, this is interesting because until very recently, decentralized applications had never been defined and put in any sort of specification so that people can make one or do one or expand the notion. So Sam, if you could just tell us from your white paper, you're in Mr. Johnson's white paper, what are the definition of a DApp?
Sure. Yeah. The way we're defining decentralized applications, again, going back into the microscopics, is it's a network that enables the whole marketplace that that network encompasses to meet each other's needs on a very particular service. And it has a token, it has a currency that is used as the memory within that system to keep track of who has added value. And it is conceivable to make a decentralized application without its own currency, but especially for applications that benefit from the network effect, and you would see greater adoption by giving incentives back to early adopters. It makes sense to have your own token, your own currency, because I, as a newcomer, can earn some MadeSafe early on, and in return stand to benefit from it as the network grows. So the decentralized application is an application that is tied to a very particular kind of service that is provided by a distributed network of providers, and that could be purchased by anybody and everybody using the token native to the application. And the mechanism with which the service is delivered is standardized in the open source protocol that anyone can also fork and contribute to. So that's the the definition of what a decentralized application is.
So just we'll get to the questions at the end. But the decentralized, it started out with one of the fundamental conditions for a DApp was that it was on a blockchain. And then along comes MadeSafe and says, well, we can do most of that, if not all of it, off the blockchain. So now the definition can be expanded. And if Paige, if you could tell us kind of how that would fit in, we'd be able to modify the definition.
Sure. So, we all kind of came into the whole decentralized application field through Bitcoin and the underlying technology, which is blockchain. However, these technologies, they say the technologies that need to come out, they tend to come out at very similar times and in different situations and different iterations. So MadeSafe was built pretty much simultaneously as Bitcoin and Satoshi was developing the blockchain technology. What is important to note is that technologies, even though they're providing similar platforms, similar use cases, they can also be extremely complementary. So blockchain technology is very good for accountability and transparency. However, what MadeSafe is building, the underlying protocol doesn't use a global ledger, so therefore it is more private in that regard, and it works better. It will work better for kind of individuals and individual privacy, whereas we think that blockchain technology is going to kind of be pushed more towards accountability and organization, transparency, and whatnot. So it's really just the idea that these ideas, decentralization doesn't have to be blockchain, and we're seeing that kind of manifest through what MadeSafe is doing. And ideally, there'll be more implementation, different technologies as well beyond blockchain and what MadeSafe is building. So the idea is to actually decentralize the protocols themselves, right? Like, you don't want to depend on one type of technology in case there's a huge flaw that's found or whatnot, and just having options between them is what we're going for.
So there's so it's contingent on a lot of innovation to populate these new platforms, and we know venture capitalists, they generally start at 10x and above. Banks, they start at a very low level. There's a whole spectrum of innovation happening between 1x and 10x, which isn't necessarily funded because it's just not worth it, or it's just something that's not known to happen. So then Joel comes along and says, well, hey, look, we can all fund ourselves. There's great innovations at 60% return. I mean, I put my money on 60% all day long, that he thinks he can extract that value through a crowd-sourced, not only funding, but also vetting, which I found really, really interesting, is that instead of a venture capitalist vetting your project, the crowd would actually vet the projects and elect them forward. So if you could tell us what Swarm does.
Yeah, I mean, we saw this as being just something that hadn't been done. I'm not really sure why, but we went out and did our own crowdfunding campaign and raised over $1 million from a number of people through this model of sort of selling a token in exchange, because it's called a Swarm coin. And we had a lot of people who were really interested in what we were doing and incentivized to make it a success. And so we put out a call and said, hey, would some of you like to participate in vetting the projects that come in? So we set up an application project, Paige, very similar to sort of a Y Combinator style application. And then basically we got a whole bunch of applications that came in. But instead of us choosing like, oh, we like this one, we're going to do it, we actually turned, 95% of that over to the people in the network who went in and they scored every application as it came in. They, basically gave questions for the people to answer, and then kind of came back and also did video interviews of the people. And I don't know, I guess we're just sort of convinced that this way of actually having a sort of a network in which there's participatory aspects and incentivization among the different people is just a much stronger model than a sort of closed group of people that and to a certain degree, like a venture fund is actually just a very limited version of this same model. There's a couple people there, they sometimes have points and then they get a part of the carry or something like that. And this is actually taking that, but then allowing everyone to participate in it. And, I think it's in this case at this moment that we can look at projects that maybe have 10x or sub 10x returns associated with them. And that's sort of the limitation potentially of doing things that, without a lot of legal tie-ins to existing infrastructure, or not really being able to do equity in a traditional sense. But I think over time, as we build out the infrastructure, we'll also be able to do those things that are, the traditional high-value aspects. And then there will be some sort of question of why would you actually go and spend all your time, pitching to some sort of venture capitalist for a seed stage investment if you could just get the same thing much more quickly and potentially much more money by going to the crowd. And in that sense, one really cool aspect too, and this is something that's killed, and it's in the news a lot about something like Uber or other things like that, where there's a strong gap between the people who are the investors potentially and the users of a platform, right? So the investors traditionally in traditional corporate structure, they have the power to decide what happens over the future of the company, It's just the board structure is all set up that way. And then, if you are a stakeholder in that project, and Airbnb is a good example of that in the sense, there are a lot of people who spent a lot of time and effort building the network. Reddit is another good example, right? A lot of people put a lot of time into building the community things, but they don't actually ever experience any of the financial returns. And if there's any kind of conflict of interest, then usually they're whatever, and they just get ignored. And it's just the nature of the organization. But this type of organization has a way of bringing these multiple stakeholder relationships on board. And in fact, we did this right in June, July, and we're very happy that last month in the recent Reddit round, there's 50 million led by Sam Altman of Y Combinator. They said they're actually going to create a cryptocurrency for Reddit that actually is tied to the equity of Reddit. So they're saying this is actually I think it's just a really important trend that we're maybe leading in, but there's a lot of other people who are kind of realizing it and kind of adding this in because, incentivizing your community to grow is just really important. And like a lot of the highest value things that you look at as far as startups are things that have this kind of community aspect to them.
The other thing I'd add as the thing that enables people to add value through Swarm, in addition to that sweet spot of the 10% and the 10x, I think taking advantage of open source, taking advantage of having hundreds of people contribute to an outcome, even in the very process of looking into a company and performing due diligence, it's just clear that if you have a project that 10 people are working on, the results are going to be better than one person working on it, and if you have 100 people working on it, it'll be better than 10. So if you have many people, many parties that are incentivized for the good projects to be funded, then in a platform like Swarm where opinion can be easily shared and individuals are incentivized to share their opinions, I would see that the outcomes would be far superior to those others that are somewhat blinded to the process, like there is in Kickstarter.
So on top, sitting in the background is this idea called Ethereum. And Ethereum has many very interesting elements to it. We know the objective is we're populating a scaffolding, okay? And as the density of that scaffolding gets tighter and tighter, these innovations are going to start interacting with each other. And only then can we actually build the fabric which is going to replace the system that's failing around us. Ethereum is sort of has some coming out with some new ideas, has a lot of applications which are going to facilitate this sort of activity. And if Chris could tell us a little bit about Ethereum and then also about the Ethereum meetup, who's showing up there, what are they saying, what are they rebelling against, what are they optimistic about, and give us a sense of how Ethereum is going to tie it all up for us.
Yeah, well, so people who are showing up at the meetups, there's a large variety. So we have some who are looking at, thinking very big. They're thinking about decentralized autonomous societies. They're thinking about putting voting system on top of Ethereum, and they're imagining, currencies on top of Ethereum, replacing fiat and so forth. But there's other people that are practical. They're thinking about much more immediate things like secure messaging and storage with security using the Ethereum protocol. They're thinking about securities and derivatives on top of Ethereum, even though that might be slightly further out. So I guess, I think Ethereum is a great platform on which to build a lot of things. It's got great technology. It's ambitious in the fact that it's providing a platform for things. But I guess one thing which I like about Ethereum is that it's not yet. There's a certain humility that I've got from Vitalik, for example, the founder. He's acknowledged quite a few problems that exist in current crypto systems, things like scalability, and so there's no. So the first way to solve a problem is to identify it and then start thinking ahead. So that's something that I really like about Ethereum, is this acknowledgement of the limitations of the current platform and looking ahead towards solutions to that. So, yeah, you asked about some specific applications. So, the Ethereum, we had a crowdfunding, or a ether sale is the right word, recently, and so we're funding quite a few developers. We're working on Whisper, this communication platform which is with the security based on Ethereum. There's a data storage protocol. There's a browser for the smart contracts, and there's work begun on an interactive development environment for smart contracts. So there's a lot of fun things happening in Ethereum.
Okay. I like to draw the distinction between classical economics being the merchant class allocates land, labor, and capital to produce all that society needs, which comes out of the Industrial Revolution. It's kind of the old way of doing it. But now land, labor, and capital are becoming increasingly irrelevant in the production of things that society needs. And we're actually considering things like social capital, creative capital, and intellectual capital as being equally sufficient in creating all things that society needs. But there's no accounting system for that. There's only an accounting system for, GDP, oil, production, and continual growth. So what it's intriguing me is, for example, the MadeSafe application. The network rewards a person for doing what they're naturally good at, in kind of an obtuse way. And I'm wondering if you could share that with us, and then let's consider the possibility that there is an economy backed by intangibles rather than by tangibles.
Sure. So I guess to sort of give an overview of how the system is going to work in terms of allocating the cryptocurrency that runs on top, called SafeCoin. There's kind of three main ways that people can act within the network. And you can kind of see SafeCoin as if it were a cryptocurrency, as if the World Wide Web launched with a cryptocurrency. So, and you can kind of see how people would act within that ecosystem. So first and foremost, the most important aspect of the network is individuals providing resources to the network, and that's how we're able to decentralize and kind of remove the dependence on servers. So people will just be allocating, portions of their laptop space and computing power to the network. And in turn, when they're actually providing value to others, others will be able to store files and whatnot in a really distributed and private and encrypted way. They'll be able to allow these people to use their space and earn compensation in return, and use these tokens, these safe coins, within the network itself. So another way that people can act within the network is, for example, creating content. Right now we have a lot of people that create content for fun, and it's something that they're naturally good at and something that they are just inclined to do. However, the system, the economics that we have today just doesn't necessarily fit in with the model, especially in terms of digital consumption. Digital consumption is a lot more granular in, you're watching movies in seconds at a time. And if you stop watching a movie and you don't like it, should you be paying for the entire movie? Things like that. So there's ways that individuals will be able to act within the safe, use the safe network, and act within sort of the safe economy to just do things that they're naturally good at. And then finally, the third way that individuals can act is being a developer. That's kind of a smaller portion of the individuals that will be using the network. But The network will actually automatically reward useful applications. This safe coin, it's one of the mechanisms how the safe coin is going to be distributed, in addition to the resource allocation, the proof of resource, we're calling it. So there's going to be really this whole ecosystem that is enabling exchange and value that doesn't necessarily need to be the same as like the real world exchange of value. It can be a lot more granular. You're not necessarily buying objects when you're interacting with the internet. You're buying bits of data, and I think the general relationship between the actors within this network will increase productivity and generally highlight things that aren't being highlighted today in terms of being valuable to society and everything.
So I'll just start opening it up to the panel. With one interesting thought that we've brought up, we know that Bitcoin has the proof of work in the cryptographic sense is what creates a new coin. We know the banking system has a central bank is the ledger, which adjudicates the creation of new money. And then we have proof of resource, proof of incentive, proof of performance, all these different proofs, and maybe in Swarm's case, proof of validity of a project, which is what creates the money. With that sort of thought in mind, let's open it up and talk about, maybe if you all have a question for each other, or anybody want to respond to this spectrum of proofs that are now creating our currency.
Well, proof of work it's got this proven background that, it's like the baseline there. So you want something that's at least as good as that. So,
Or you want something that's better than the banking system, actually.
yeah, well, so yeah, that's a
It gives us the spectrum. Now, is there a possibility in that spectrum that we can actually, launch currencies, individuals launch currencies based on their future productivity with these innovations?
yeah. I mean, you could, as part of you could certainly imagine that for example, there's interest in Ethereum of building a reputation system, and you could imagine that is effectively like a per person currency. So, that's
It's conceivable that people will issue their own personal coins, but really the use case of issuing a currency is because you want to standardize what you're buying. And on a microscopic interaction, that when you go to a physician and you actually choose that physician over another because of the differences that he's able to offer, and that would be the point at which a personal currency becomes useful. But I'm not sure if many of the reasons for decentralized applications have to issue their own currencies actually then are still applicable for individuals to issue their own currencies. Fundamentally, because if I'm a single, sole provider person, I don't see how there would be a network effect. Why would other people contributing value to the system I'm building will stand to gain from SAM coins? And if that's the case, then it's a joint effort, and it's not buying services of SAM, but something else we're building. So it sort of merges out of the individual to that of a group effort. And I think that's why there's merit in the decentralized application. It enables us to make sure that our incentives are aligned when we are working together and building things. That's a great way to monetize open source. Right? What I was saying before is 10 people are better than 1, and 100 is better than 10. The emergent product out of effort is far superior when multiple people and parties have aligned incentives. And one great way to do that is to give ownership to the emergent service to all those who contribute. So I see a great reason for issuing a token, issuing a currency not being there for individual use cases. But I think what Dan is trying to get at is not necessarily issuance of personal currency, but rather bringing in a specific use case of transmitting someone's expertise to where they're needed the most, when they're needed the most, right? That's what you're trying to get at, right? When I issue SAM coins, then everybody would know, hey, I gotta go and buy some SAM coins because I need his expertise. I think the decentralized mechanism with which we can do that isn't to issue a SAM coin, but rather to make another application that ties into my information that I store in MadeSafe, ties into my information that I have in my communication channels, and understands where my thoughts are, understands what my expertise is, and automatically, through use of AI, matches me up to that project. And then that project doesn't need to purchase SAM coins. That project just needs to give me that project's coins in return to my contribution. That becomes a very interesting model to do some expertise brokering through decentralized applications, fundamentally because decentralized application removes a huge kinetic barrier, which is that I, as an individual, before I can add value in a company, need to sign a contract, need to be vetted by the group. But now in a decentralized marketplace of labor and expertise, I can offer up my services and in return be compensated in the tokens native to the application that I help make stronger. So I think that's one way to do that.
And I would frame this in a very simple way, in the sense that, there's a middleman that stands between you being able to do this today with existing systems, and that's usually lawyers. I mean, I don't have anything particular against lawyers, but, every time if I transfer one share out of my 100 million shares to you, I have to pay a lawyer, $1,000 to do that. And there's a lot of paperwork involved. And this is just potentially a way that, eventually can be integrated with the existing legal system, but of just doing something like that without any of that kind of friction or, very high cost.
Right.
So if I have, 100,000 people that are contributing, I want to give them back, something. I don't want to pay $100,000 to have to do that.
But I guess
you don't.
the reason why there is the system that hires off lawyers is because we value fairness. It's a human instinct that we want to have our transactions be fair and just, and we're willing to pay the costs. But when you have a digitized service, an algorithm that performs the justice, that performs the pre-allocated distribution of resources that everybody has agreed on, and have voted in favor of by virtue of using that application, then you eliminate the need for a paper backbone and a human attention having to perform the task of justice and fairness.
Yeah. And I think that one thing that really can't be underestimated at this point, or overestimated, I guess I should say, is just the power of smart contracts and the sort of things that can really be fully automated and done programmatically on the basis of contributions, but also just of traditional funding pathways. So if the major, you can set up a sort of receiving vehicle for any kind of funding that you're getting. So say you're selling a game on the App Store, and that every time someone buys the game, the profit is programmatically distributed to the people who have your shares or something like that. That's something that you could never do before, but now you can build it into the infrastructure so that everything that's done along those ways is just totally programmatic. And again, there's a lot of cases where you would have to pay 3 or 4 different people some sort of fee to make that happen, and now you can just make a little smart contract that's going to do that for
Ether
you.
versus lawyers.
Yeah. No, it really is. I mean,
What are the next big disruptions? What's going first? Insurance, banking? Which ones are going to fall first?
I mean, I think venture capital is extremely vulnerable right now, to be honest. So I think there's just a lot of friction in the system that doesn't need to be there. It's actually partially historically, interestingly enough, something that was introduced into the system by regulation of venture capital, and that the early venture capital funds that were set up allowed for more direct incentivization of the partners, and now that's sort of been removed. So everything's sort of mixed together. So I don't know. I really think that's one of the things that's really going to be at the forefront of like, ooh, look, we don't actually need to go through these institutions anymore.
When you can go to the crowd and immediately have your first adopters as your early contributors. You don't need to go and court investors for 6 to 9 months before they invest, and then go spend the same money to buy your first adopters. And I agree. And platforms like Coinify and Swarm are going to be, very useful to put capital and resources behind many of the projects. And that's why we're actually crafting a distributed capital protocol instead of having regular venture capital investing in decentralized applications. That would be the tier 2 of how venture capital will take form.
Chris?
Yeah, I just had, you were asking what might be disrupted next.
I'm just trying to
And,
start a fire here.
Yeah. So, I actually think that, one thing that I could see happening soon is secure messaging, for example. So there's lots of people, we've had lots of discussion in the country and in the world about security and about privacy recently. So I can imagine a blockchain-based secure messaging system being.
But that's where MadeSafe leads. That's their leading argument. We're about your security, and then they go off and do these magnificent things. And that's a very compelling argument. You're right.
I'm actually really excited about the disruption that is going to happen with the individuals creating these things, the startups themselves. When you're not depending on venture capital for certain things, you can kind of decentralize the organizations themselves. So I think we're going to end up seeing a lot more companies looking more like cooperatives and collectives rather than kind of the top-down hierarchy structure that we're seeing today with CEOs. Not necessarily that's a bad thing, but I think we're going to be seeing more, the more that developers are going to be earning directly for their contributions to things, and the more that we create incentive for the actual productivity and the output, you're going to be seeing more of the just general shift in mindset and how we're paying the individuals. It's not going to be from central points anymore.
So you are looking to start a fire. So I have a quick question for Joel.
Yep.
So are there any parts of Swarm which could not be built on top of Ethereum? And I guess we could ask Paige the same thing.
Well, I think fundamentally, Vitalik was one of our early advisors.
Simple yes or
right?
no to start would be sufficient.
Well,
Would
no,
help.
but there's an infrastructural component, right? Technological component, and then there's a sort of community network component of people who are feeding in applications and things like that. So fundamentally, the actual technology, necessary to submit, have an application form and submit it and review that application is not very complicated. It could be built, in fact, our back-end part of that is built in Salesforce. It could be built in AngularJS, which is what our front-end is built in. It could be built in a number of different things. But that's not what makes it valuable. It's the technology.
Yeah, so Ethereum is kind of focused on, the security in the back end. So let's talk about, the use of that in Swarm.
Right. So the actual asset issuance is really an issue of the security of the underlying blockchain more than anything else. And so Counterparty, which is what we're using so far, not only operates out of an Ethereum fork, so it has all the smart contracting capability that exists in Ethereum right now. It also has the security of the Bitcoin blockchain, which generally is expected that it will last for quite a while. Otherwise, people wouldn't be making all these investments in it. Now, the same functionality exists in Ethereum to do the same thing. It just hasn't been released yet, so it's still not there entirely. And you have to make a bet on how secure is the Ethereum blockchain, which is a particularly big issue since a lot of the Ethereum core developers are already talking about Ethereum 2.0 and these other things and haven't stabilized their proof of work versus proof of stake and which algorithm and things like that. So we were in a position early on saying, well, we could bet on Ethereum, but you have to wait until it's released and let it go through a few cycles and see kind of where it's going down the line before you're willing to take something that's essentially a very long-term thing, saying our fundamental asset that is for our project is going to be issued here. Now, I think fundamentally the technology is there to do everything that's there, and I'm optimistic about that technology set. But would you, at this point, take that risk to say, I'm going to issue this asset on a blockchain that I don't know where it's going to be in 3 years? So that's the fundamental question.
Okay, great. I mean, so we could say more about that. I mean, certainly I think it's a reasonable response. What I parsed out of that is that, yes, you could build things on top of Ethereum, and that I'm guessing that when Ethereum goes live, the live blockchain, that Joel is going to be looking at it further. And
well, I mean, I just came from the Ethereum Developer Summit in Berlin, and I'm looking at it very closely. And for instance, the secure messaging protocol, something I've talked with Gavin Wood, the CTO, or whatever, quite a lot about, and as well as many of the other aspects. So
let's get Paige's comments, and then we'll open up. We got 15 minutes left, so then we'll open up for questions. I think Paige had something to add to this.
Yeah. So the core difference between MadeSafe and Ethereum is that MadeSafe is not blockchain technology. It offers a completely different set of benefits. You're no longer needing to worry about transactions and whatnot being published on a global ledger and trying to work around that. MadeSafe is essentially completely decentralized, and I honestly think that this the whole Ethereum 2.0, I don't even know really what they're saying in terms of that, but with what they're developing for the data storage and messaging, I think it's honestly going to start looking more like MadeSafe. So right now you can't make an internet on a blockchain because that would be huge. You can't have a global ledger that's tracked by every single individual, every single node, because it would just be far too large to store each person. And what, as far as I know, what Ethereum is looking into is using BitTorrent technology to decentralize the storage and that's kind of where one of the technologies that MadeSafe is spawned from is looking at how BitTorrent and distributed hash tables are best used to kind of to build the entire internet, whereas blockchain technology is each node needs a full copy of the ledger for the security aspect, and MadeSafe will be able to work around that.
First question out back.
Hold on 1 second. Are you talking to the microphone?
Please wait a moment.
Hi, Mitra Arjun from Lumita Networks, and we do payments on distributed electricity systems in developing countries. So my question is about trust. Like, we've been hearing assertions about how distributed systems are going to be more trustworthy and more secure. But to be honest, we've been hearing them for 20 years. I was CTO of a P2P company 20 years ago, and we've seen no existence proofs that that's actually going to be true, as opposed to what we would like to be true. I mean, if we look at the adoption of things like Bitcoin in developing countries, or even anywhere outside of the digerati, and certain subgroups who have extreme security needs, trust is the big issue. Trust that you can convert it into something you can use. Trust that you can store it without it being stolen. Trust that it's not going to have an awfully volatile value. So why do we think it's going to be different this time?
Well, it's certainly possible that it won't. So that's a good starting point. I mean, nobody. I don't. I mean, I think if you're rational, that you would say that it's possible that. I mean, you know, there. I mean, trust is it's a really big idea. I mean, it depends on, for example, if you look at Bitcoin, you could say whether or not you trust the network, and you know, you could. It's possible that you know, some government will attack it in the future and it will kind of kill it, but.
Or your wallet will be stolen, or the conversion value will go down to 50% of what it was, or there's some other flaw that we haven't seen.
Yeah, so I mean, it's hard to predict the future, but I think you know, if you're thinking about trust, then you know, you get to start small, start somewhere. So I think, you know, we can't predict the future.
It's kind of impossible to remove trust, like as long as you have human actors within these systems. The idea with Bitcoin and decentralized technology is to remove the trust of like middlemen and push the trust to the peers and establishing trust in that way.
Decentralized applications, I think, have a rich and varied history going back way before Bitcoin, right? The first really successful one was BGP for routing data on the internet. BitTorrent does really, really well with distributed hash tables. There are a lot of things here. Bitcoin was really the first, what I'd call an app coin, where it's a distributed application that actually has its own internal currency. And it seems like that's all we've been talking about at this panel, are distributed applications that have internal currencies or are tokenized in some way. Are there any distributed applications that you're excited about that you can't invest in a token?
Well,
Secure messaging is a one
well,
start.
there's already existing like SETI at home and folding at home type things where people are contributing computing resources to these scientific problems that need to be solved. There is no token, but you can also see that they're not as quickly growing as Bitcoin. They have a much smaller network effect. So the idea with the currency is to create an incentive to participate in the first place.
I mean, just to be clear, the you know, Ethereum, for example, has a currency, but the idea is that it would be functioning a bit more like oil, and so you might use a little bit of the ether in building a secure messaging system, or to put a bit of security behind a distributed hash table system. But it's I mean, it's more like oil. I mean, I think that currencies are a bit of are an important part of our society today. I mean, so I think I mean, having that be a part of a system, a secure messaging system, even if it's in a small way, I think is reasonable.
So, question about usability. History of technology is that usability trumps technology every time. So I hear lots of talk about the technology in the back end and how it's cryptographically secure, and isn't it great? In a world where certain of my family members both can't remember their passwords and can be simultaneously socially engineered out of their passwords, how do you make this stuff actually usable by my mother?
I'd like to address that maybe a little bit with respect to the previous question about trust from a little bit of a historical example. I think it's very important to understand that the current phase of sort of distributed application with the currency and that sort of Bitcoin and things built on top of it comes out of a long history of digital currency experimentations, many of which were unsuccessful or found that the early adopters were people who had sort of criminal intent or something like that, and that sort of didn't lend themselves very well to sort of the governments where they happened to be, and then they were shut down. So the kind of way the reason we've gotten where we are, I think, is, and the reason why these peer-to-peer models have been more successful in this case, whereas in the past they actually weren't very successful for certain types of things, is because of that issue. And so that's a way of sort of getting it out there and disseminated. It's not necessarily the best way to bring it to a large audience. And because the large audience doesn't necessarily care about the underlying technology, it doesn't care about, how you, get away from, corrupt governments or whatever things that some people might care about. It doesn't necessarily about the security of its messaging because it's not transmitting things that it really is that worried about. So that is a massive thing in that, really to take this stuff to a larger audience, you need to be able to bridge that and you need to be able to explain it in such a way that the value that's ostensibly there is something that, ordinary people can appreciate immediately. And fundamentally, that's a very difficult thing because, a lot of the actual, benefits are difficult to explain or only apply in very limited use cases. So, that's something we struggle with every day, really, is saying, look, we have this messaging that we created, crypto equity or something like that appeals to people who already understand what cryptocurrency is, but normal people, maybe some of them get excited about it, but they don't really understand fundamentally what it is. And then when you get into the explanation of it and how it can be used, they get lost in the kind of details.
People don't know how their mortgage is built.
Right, exactly. They don't understand how the mortgage, and it's sort of like you put a green button there, and then people will push the green button, and then they'll do what they're kind of told to do. So. That's it's a challenge, I think, with every technological innovation, and I think the internet is a very appropriate example in this case because the internet for a long time was really difficult to use. I mean, the Usenet is still not easy to use if you go back and try and use some of those things. But those were the things where the really early traction happened, and I think it's a similar case here where you have things that get early traction among technological enthusiasts, and eventually, maybe after several iterations of it, you get some kind of templated language like HTML that can be shown to people, and then suddenly, it's like I can actually see an image, and now I'm excited. So,
Chris.
Yeah.
Chris, did you have a question? Okay.
In the meantime, one other quick thing there. For the applications that do benefit from the presence of a currency, the other usability element will be you'll likely be able to convert from one currency to the next very easily.
The convertibility issue.
I'm hoping I'll end up with a question, but I have side step first. I'm a lawyer, former lawyer, I've been building decentralized applications for some time. So I'm just going to say that when I hang out with lawyers again and I compare them to people like you all, I think of the lawyers as Catholics and the rest of us as Buddhists. I mean, it's just kind of a handy way to think about the differences. And I think so I think that's sort of my question comes out of that is aren't decentralized applications different than distributed technology? And isn't there a more compelling case that can be made for it? The time is ripe now because of the confluence of both technologies and ability to manifest worldview mindset in those technologies that exist in a way that didn't exist 20 years ago? Is that too big of a question?
Well, it's true.
Yes.
I mean, this is an incredible nexus of ideas, point in time. I mean, I think Morgan Stanley's even calculating, the end of the dollar is not infinite; it's a finite number. It's something's got to happen, something's got to give, and this is it.
I don't know.
Well, yeah, the distributed technologies, when you look at it in the context of, hey, this is a technology or a service that could be provided by a marketplace of distributed providers. There are many distributed applications and technologies one could conceive of, and to that extent, any share economy service, including Airbnb and Uber, or Lyft could be considered, distributed services because you get the services from a distributed network of providers. But the tokenized decentralized application is more of a timely add-on to that because of the existing infrastructure that is being built.
Yeah, I mean, I think you can look at this stuff and say there's these collaborative organizations that have and existed for a long time, but it's really hard given the nature of corporate governance. I think from legal people should be able to appreciate this very easily, particularly in the United States, in the sense you have a very standard set of what is a corporation, and it has a template associated with it, and it has a lot of laws that surround this is what you can and can't do with a corporation, and fundamentally it's not very flexible. And what we're kind of at is the era with smart contracts where you can program your own governance and say, here are the rights that apply, here are the things that you can do and can't do, and have like a sort of, I guess in classical legal terms, it's called a Ricardian contract, where there's a lot of variability that is actually programmable. And yeah, I mean, that's really, very cool and really enables a lot of things that are like collaborative communal efforts that just you can't do.
There's just no accounting system for what's between people's ears.
Yeah.
There is for the corporations. I want to get to Gene.
Actually, quick comment. Next Sunday in Mountain View, we're going to have Harm Bavnik, I think it's Bavink, talk on computable contracts on top of Ethereum, if anybody are interested in coming.
And also, not to name drop, but I'd encourage you guys to take a look at Factum, which is a very interesting decentralized application that is aiming to keep a distributed record book for all the contracts. So you can use the Bitcoin blockchain to store and safely secure contracts. So definitely worth checking out.
So I'm going to zoom us kind of pretty far out to build on something that Joel said. So if we think that the next disruption is about VCs, VCs are modifying the system to elevate companies that scale and become big. So I keep hearing people say, oh, the way to network effects is to be big, and it's still looking at centralized structures. So we're talking about decentralized applications, and yet still focused on how do we build big organizations. And so what is it to move towards what Paige said about cooperatives and have federations and scale out instead of scaling up, so that there are still network effects. And I think this is really important when we're talking about trust, because part of the reason we've gone into decentralized is because we don't trust the big. And it's a security issue too. The bigger it is, the more attractive it is to hackers, because they can do one thing and get access to many. And so if we decentralize, right, and distribute, then the cost for hacking becomes much higher because they have to do it over and over and over again for low value returns. And so what is it to move towards scaling out rather than scaling up within this field?
Actually, maybe you could, when you say, what is it, of course it's, ideally we would have, lots of little corporations, but I don't know. But there's certain things that Apple could do, for example. You can imagine that your iPhone is probably many times more complex than the Apollo program to make it. So it may not be possible to have Apple. You're shaking your head, but since as an engineer, as an electrical engineer, I will just tell you my opinion that the iPhone is multiple times more complex than the Apollo program. So it may not be reasonable to expect every business to exist in a decentralized way as long as you want to have an iPhone.
We're integrating complex systems, aircraft, structures, buildings, infrastructure. These are all things that some of us are. I'm an engineer also, and we're looking for a cryptocurrency which does articulate, or at least a adjudicated smart contract system where you can articulate engineering judgment.
Maybe I'm being a little bit too practical. I think I'm saying that that's not happening soon. You can certainly imagine in the future.
We're going to try to make it happen sooner than later, but that's what the whole entrepreneurial structure is about. That's we're trying to get all these people to pile on and start rebuilding, so to speak.
Yeah, the way I see it is there's a natural tendency toward reducing energy and maximizing entropy.
Okay. I have 2 minutes, and I think the next person here.
A decentralized application in a line of service, instead of having 200 small ones, it'll be more favorable for the system to accommodate a fewer larger ones. And yes, there will be a constant rebreaking and rebuilding when there are attacks made to it. But I don't think that nature of distribution of the sizes will be very different.
We're going to try to fit in one more question from this gentleman here.
Great, thank you. Yeah, my question has to do with authentication. So 2 things that I see that this technology is doing that will make authentication more important is, first of all, it's creating an immutable record that's going to last people's entire lifetimes. They may start at 5 and then have transactions or other events that are associated with them that will live until they're 90. And then secondly, it's reducing the friction for online transactions. And if you put those 2 things together, it just feels like it's going to put an intolerable strain on our current authentication system. So I'm curious as to how you guys see authentication playing out in the future.
MadeSafe deletes. That's one of the unique characteristics of MadeSafe, right?
Right. MadeSafe won't have this global ledger where it's you're keeping a record of every transaction, and because of that, it's also the whole transactions themselves will be pretty much instantaneous and infinitely scalable. What's interesting particularly about what MadeSafe has built for authentication is actually providing a way for individuals to access the network and their data and whatnot in a way that they're not giving any password to the network, so there is no possibility of their password getting saved on the network or leaked on the network at all. It uses this method called self-authentication. But yeah, in terms of blockchain technology, I think there are some issues with that, and that's why I think blockchain technology is going to be pushed towards organizations where you want to have that global ledger all the time, the complete history, whereas individuals will be pushed towards technologies that don't really have this global ledger aspect, or work around it at least.
Well, thank you very much. This has been an excellent panel. This is the conclusion, and we can all just go into the hallway and exchange cards. I'd love to hear from more of you, and hopefully connections can be made with the panel. Thank you very much.
Thanks for coming.